Let's face it, prices are skyrocketing, paychecks feel smaller, and most folks are stuck in 9 to 5 grind just to stay afloat. If you've been thinking about trading as a side hustle to bring in extra income, then you're in the right place. Balancing trading with the full-time job isn't easy, but as someone who works full-time and trades on the side, I've learned how to manage my schedule, focus on the right strategies, and prevent trading from interfering with my day job. Stick around, because today I'll share the pros, cons, and practical tips for building a trading routine that works for you without burning out or risking your performance at work. In today's video, I will cover the different trading and investing styles along with their pros and cons, how to choose the best trading approach for your goals and schedule, and finally the biggest challenges of trading as a side hustle and how to tackle them. Some of you may be asking if it's really possible to trade alongside a full-time job. The short answer is yes, but it's going to take a lot of patience, planning, and discipline. Most people with full-time jobs trade before work, during their lunch breaks, or in the evenings. Some even trade on the weekends if they're focused on the markets like crypto or Forex. The trick here is finding a trading style that works with your schedule. For most 9 to 5 workers, swing trading or long-term investing is better fit than day trading. Let me break down the different trading styles for you now. First, we have day trading. Now, if you've heard people talk about trading, chances are they're referring to day trading. It's one of the most popular styles, and for a good reason. It's fast-paced, exciting, and can be very rewarding if you know what you're doing. This style of trading involves buying and selling assets within the same trading day. You're not holding anything overnight. Sometimes you might hold a position for just a few minutes, and other times it might be for a few hours. It all depends on the market conditions and how the trade plays out. The first big advantage of day trading is the potential for daily profits. Unlike other trading styles, which might require you to wait a few days, weeks, or even months to see results, day trading allows you to close your trades by the end of the day. If you're good at it, you can generate consistent income relatively quickly. That quick turnaround is a huge draw for many people, especially those who want faster results. Another advantage is it's very fast-paced and exciting. Day trading is an adrenaline rush, is dynamic, and there's always something happening. You're constantly watching charts, analyzing price movements, and making quick decisions. If you thrive in high-energy environments, day trading can be a lot of fun. It keeps you on your toes and never feels dull. And let's not forget about skill-building aspect. Day trading sharpens your technical analysis skills faster than almost any other trading style. You'll get really good at reading charts, spotting patterns, and understanding market trends because you're analyzing them so frequently. Those skills can be incredibly valuable, not just for trading, but for understanding the markets in general. But of course, day trading isn't all sunshine and rainbows. It comes with some significant challenges, and one of the biggest one is how time intensive it is. Day trading requires you to monitor the markets constantly. You're watching price movements in real time, reacting to news, and executing trades at just the right moment. That kind of focus can be hard to maintain, especially if you're trying to balance it with a 9 to 5 job. Another downside is the high level of risk. Because you're trading so frequently, you're also exposing yourself to more opportunities to lose money. And if you're not careful, or if you don't have a solid risk management strategy in place, those losses can add up quickly. It's definitely not a style for the faint of heart. And here's the hard truth. Statistics reveal the odds aren't in your favor. Many factors contribute to this. Lack of experience, emotional decision-making, inadequate risk management. But the reality is the odds are stacked against most people. Over 90% of day traders lose money, and majority quit within the first year. This doesn't mean success is impossible, but it highlights just how challenging day trading can be. It requires not only skill, but also persistence, discipline, and willingness to learn from your mistakes. And finally, it can be mentally draining. Watching the markets all day, making split-second decisions, and dealing with the emotional ups and downs of winning and losing can take a toll on your energy and your mindset. Burnout is a real risk for day traders, especially if you're not taking breaks or managing your stress levels effectively. Now, let's talk about who day trading is best suited for. If you have a flexible schedule or work remotely, day trading might be a good fit for you because you can dedicate the time needed to monitor the markets. It's also ideal for people who thrive under pressure and enjoy quick decision making. If you're someone who loves solving problems on the fly and doesn't shy away from high stakes situations, you'll likely enjoy the fast-paced nature of day trading. Additionally, if you have exceptional analytical skills, day trading can prove to be profitable. The ability to process data quickly, recognize patterns in price movements, and interpret market indicators gives you a significant edge. Successful day traders are often those who excel in analyzing large amounts of information and applying that knowledge effectively. But let's be clear, day trading is not a guaranteed path to success. If your schedule is packed or you find high-pressure environments overwhelming, this might not be the best style for you. Finally, let's talk strategy. If you're considering day trading, you'll want to focus on liquid assets, things like stocks, Forex, or even futures. Liquidity is key because you need assets that move a lot during the day to take advantage of price swings. Another crucial tip is to use tight stop-loss orders. This helps you limit your risk by automatically closing out a trade if the price moves against you. And when it comes to profits, don't aim for home runs. The goal in day trading is to go for small but consistent wins. Over time, those small gains can add up significantly. If you're balancing a full-time job and you cannot trade during regular market hours, focus on pre-market or after-hour trading if your broker offers extended trading sessions. These time periods can help you catch significant price movements before or after the regular trading hours. You can also plan your trades the night before. Spend some time analyzing charts and creating a watch list for the next day. Once you've identified key levels, set limit orders or alerts to minimize the time you spend actively monitoring the market. To be honest with you, if you cannot trade during regular market hours at all, I would not recommend day trading. If after all this information you're still thinking about diving into day trading, make sure you have the time, the focus, and the temperament for it, and always trade with a solid plan in place. Swing trading is a more relaxed style of trading, and that's why it's such a great fit for people with full-time jobs. With swing trading, you hold trades for a few days, weeks, or even months to take advantage of broader price trends. One of the biggest advantages of swing trading is that it works with a busy schedule. Unlike day trading, you don't have to monitor the market constantly. You can analyze the charts in the evenings or on weekends and plan your trades for the upcoming week. It also offers a balanced risk-to-reward ratio. Swing trading lets you aim for larger profits than you would typically see in day trading, but without the constant stress of being glued to your screen. Speaking of screen time, that's another big win. You'll spend less time watching charts. Once you've entered the trade, it can often manage itself, especially if you use tools like stop-loss and take profit orders. But swing trading isn't without its challenges. For one, it requires patience. Trades take longer to play out, which can be frustrating if you're used to the quick results of day trading. There's also the risk of market gaps. When you hold positions overnight or through the weekend, news events or global developments can cause sudden price swings that may work against you. Lastly, you'll need to develop strong technical analysis skills. Understanding chart patterns, trends, and indicators are essential for finding high probability setups. So, who's swing trading for? It's perfect for people with 9-to-5 jobs who can spend their evenings or weekends analyzing the market. If you want a balance between active trading and longer-term strategies, swing trading might be the ideal approach. It gives you enough flexibility to fit trading into your lifestyle without requiring constant attention during the workday. Now, let's talk about strategies to make swing trading work alongside your full-time job. Dedicate some time on Saturday or Sunday to review daily and weekly charts. Look for potential setups, things like stocks bouncing off support levels, breakouts above resistance, or strong trend continuations. This weekend prep allows you to plan your trades for the week ahead. Once you've identified your setups, place limit orders at the price levels where you want to enter or exit. For example, if you expect a stock to bounce off key support level, you can set a buy limit order at that price. This way, your trades can execute automatically during the workday, even if you're busy at your job. Leverage trading platforms or apps like TradingView to set alerts for key price levels. Instead of checking the market constantly, you'll get a notification when it's time to act. This saves you time and ensures you don't miss important opportunities. Always use stop loss and take profit orders. For instance, if you enter a trade based on your weekend analysis, set a stop loss below a key support level and a take profit at the next resistance level. This way, your trades are managed automatically, even while you're focused on your 9-to-5 job. Focus on daily or weekly charts to make your trading decisions. Higher time frames reduce the noise of intraday price fluctuations, making it easier to manage your trades and analyze trends during your free time. Swing trading offers a great balance of flexibility and opportunity, and with the right strategies, it can complement your full-time job perfectly. Finally, let's talk about investing. Investing is a long-term approach where you buy and hold assets like stocks, ETFs, or mutual funds for years or even decades. It's not about making quick profits. Instead, it's about building wealth steadily over time. One of the biggest benefits of investing is that it's low maintenance. Once your portfolio is set, you only need to check it occasionally. There is no need to monitor the markets daily, which makes it perfect for people with busy schedules. Another advantage is compound growth. When you reinvest your returns, like dividends or interest, your money grows exponentially over time. This is where the phrase "let your money work for you" really comes into play. And finally, investing is low stress. Since you're not reacting to every small price movement, you can focus on the big picture and avoid the constant emotional ups and downs that come with active trading. But like any strategy, investing has its challenges. One is that it takes time. You won't see significant results overnight, so patience is key. You'll also need emotional resilience to stick with your plan during market downturns. When the market dips, it's tempting to panic and sell, but staying the course is critical to long-term success. Additionally, building a well-diversified portfolio often requires upfront capital to spread investments across multiple assets and reduce risk effectively. However, this doesn't mean you need a large sum to start. You can begin with small investments and gradually build your portfolio over time. So, who's investing for? Investing is perfect for people who are focused on long-term financial goals, like saving for retirement, buying a home, or building generational wealth. It's also a great fit if you don't want the stress of daily trading or don't have the time to actively manage trades. If you're patient and willing to let time and compounding work their magic, investing is an excellent choice. Now, let's talk about how to make investing even easier to manage, especially if you have a full-time job. One of the simplest and most effective strategies is to set up automatic contributions. Use dollar cost averaging when you invest a fixed amount of money at regular intervals, whether it's monthly, bi-weekly, or every paycheck. Most brokers offer tools to automate this process, so you don't even have to think about it. Focus on diversified assets. Start with ETFs or index funds, which give you exposure to a wide range of stocks or sectors. This diversification reduces risk and simplifies your portfolio management. Instead of trying to pick individual stocks, you're investing in the broader market. If you're investing in assets that pay dividends, make sure you're reinvesting those payments. Most brokers lets you set this up automatically, so every dividend payment gets reinvested to buy more shares. Over time, this compounding effect significantly boosts your returns. Schedule portfolio reviews. Instead of checking your portfolio daily, set aside time quarterly or annually to review and rebalance it. Rebalancing ensures your asset allocation stays aligned with your goals. For example, keeping a specific percentage in stocks versus bonds. Stick to a long-term mindset. Remember, investing is all about playing the long game. Don't get distracted by short-term market fluctuations or daily news. Focus on the fundamentals, like company growth, industry trends, and economic condition during your free time. Once you've built your diversified portfolio, let it do its thing. Trust in the power of time and compounding to grow your wealth. Only revisit your strategy if your financial goals or circumstances change significantly. By the way, if you're new to trading and wondering which financial market suits you the best, whether it's stocks, Forex, crypto, or futures, check out my video on everything a new trader needs to know about financial markets. It's packed with helpful information to guide you in identifying the right market based on your schedule and goals. The link is in the description below. Now let's talk about one of the most important topics. The challenges you'll face when trading as a side hustle, and more importantly, how to deal with them. Trading can be incredibly rewarding, but when you're trying to balance it with a full-time job, it comes with its fair share of obstacles. First up is emotional stress. Balancing work and trading can feel overwhelming, especially if you're squeezing trades into an already packed schedule. Between work deadlines, market analysis, and executing trades, it can start to feel like you're juggling way too much. This stress can lead to burnout if you're not careful. I highly recommend checking out my video on trading psychology. In that video, I go in depth on how to keep a balanced emotional state while trading, which can make a huge difference in how you handle the ups and downs of the market. Another big challenge is overtrading. Trading is exciting, there is no doubt about it, but that excitement can sometimes push you to take too many trades or chase losses. It's easy to think, just one more trade, but overtrading is a fast track to emotional exhaustion and poor results. And then there is fatigue and poor decision making. Trading requires focus and a clear mind. If you're already tired from your day job, it's all too easy to make impulsive decisions, miss key deadlines, or let your emotions guide your trades. Fatigue can have a huge impact on your performance, both at work and in the markets. So how do you overcome them? The good news is that with the right approach, you can manage these obstacles and make trading work alongside your full-time job. First, create a schedule. This is absolutely critical. Dedicate specific times for market research, setting up trades, and reviewing your results. For example, you might analyze charts in the evening, set up trades for the next day, and check your results briefly during a lunch break. The key here is consistency. When you stick to a schedule, you're less likely to overtrade or let trading spill into other parts of your life. Next, automate your trading wherever possible. Use tools like stop loss and take profit orders to manage your trades without constant monitoring. These tools allow you to set clear boundaries for your trades. If the price hits your stop loss, the trade closes automatically, minimizing your losses. If it hits your take profit level, your gains are locked in. Automation can save you time and reduce the stress of having to watch every tick in the market. Another important tip is to focus on quality, not quantity. It can be tempting to take every trade that looks promising, but successful trading is about high probability setups, not frequent trades. By limiting yourself to only the best opportunities, you'll make more calculated decisions and avoid the exhaustion that comes from overtrading. And finally, take care of your mindset. Trading is as much about emotional control as it is about strategy. Find stress relief techniques that work for you. That could be exercise, journaling, meditation, or even just stepping away from the screens for a bit. A calm, focused mind is one of your biggest assets as a trader. Trading as a side hustle isn't easy, but the challenges don't have to derail you. By staying disciplined, using tools to your advantage, and prioritizing your mental well-being, you can balance trading with your 9-to-5 job and do so successfully. So is trading as a side hustle worth it? For me, the answer is yes, but only if you're willing to put in the time and effort. Trading isn't a shortcut to overnight success, and it's definitely not for everyone. However, beyond the financial rewards, trading has taught me some invaluable skills. It helped me develop discipline, patience, and the ability to think critically about markets and money. That said, the value you get from trading depends on your goals and what you're willing to invest in terms of time, energy, and learning. Let's quickly recap the trading styles we've talked about today and help you decide which approach might be best for you. First, we have day trading. It's great if you're looking for quick results, but it requires a lot of time, focus, and emotional resilience. Day trading is better suited for those with flexible schedules or remote jobs, as it demands constant market monitoring. Then there is swing trading. Swing trading offers flexibility and balance, making it an ideal option for most 9-to-5 workers. It allows you to plan trades in your free time, like evenings or weekends, and manage them during the week with minimal effort. Finally, we have investing. Investing is the ultimate low-maintenance option. It's perfect for long-term wealth building, and it doesn't require much day-to-day involvement. If your goal is to build a nest egg for retirement or achieve financial security over time, investing is a fantastic choice. If you're serious about starting your trading journey, I encourage you to check out my other videos. I've covered beginner trading tips, understanding financial markets, and how to master trading psychology, as well as many technical analysis videos, all of which will help you build a strong foundation and technical skills before you start your journey. If you enjoyed this video, leave a like, drop your questions in the comments below, and don't forget to subscribe for more content just like this. Thanks for watching, and I'll see you in the next one.